Let's get more with Mark Keenan. He's a cross-commodity research strategist at Société Générale, and he's live out of Hong Kong. Mark, do you trust this gold rally? Is it going to be sustained? Because a lot of people are saying it's going to really struggle to get to the late August highs that we saw above 1400. Would you agree?
I agree. Morning, Sri. Yes, much of this recent strength in gold has really been a function of a bit of short covering that we've seen in the futures markets. It's been pretty interesting to see that in the background to this, we've continued to see liquidation on the ETF side, despite this recent tick higher. But it's this month that we're heading into, the month of November, is a little bit of a tricky month in that it is the peak demand for the Indian wedding and festival gold buying period. So we might get slightly higher numbers from these levels. Going back, I was looking at the historical performance of gold in all the Novembers prior to this, and we can expect about a 3.8% rise in the price over this month. So possibly, we might see a little bit more strength onto these numbers, but frankly, anything approaching 1400 would be very surprising.
I think you made a great point about the festive season in India, Mark, and I think that the import restrictions mean that it's going to be far more subdued on the demand side. But isn't China the big wild card here from a demand perspective?
It is. But I think that much of the sentiment in the market at the moment, and really where the cautious people are focusing their interest at the moment, is on the Indian side. And really whether we're going to see any more import controls from India, and also how much the weakening rupee will have on these proposed Indian buying over this month. Another thing that's also prudent to bear in mind is during this month of the year we get the revisions to the commodity index weights. These are indexes like the Goldman Sachs Commodity Index, the Dow Jones UBS Index, and these indices hold billions and billions of dollars of long-only money. During November, they published the revised weights, the revised percentages for each commodity, and these are then rebalanced very early in the year, in January of next year. Now, with the weakness that we've seen in gold and certainly silver, they are likely to be the greatest candidates where we can expect rebalancing money to support prices. Right. So that may be another component this month just to look out for.
Indeed. Mark, very finally, tactically, you are advocating a long palladium, short gold position. Am I right?
Absolutely. Yes. I mean, generally in commodities at the moment, we see far more opportunities in relative value space. And one of the pairs that we very much like is long palladium and short gold. And palladium, a very interesting market. It's one of our strongest calls for next year and also for the rest of this year, with it being driven currently both by very bullish supply and demand characteristics. On the supply side, it seems very likely that the Russian stockpiles are reaching extremely low levels. Historically, Russia has made up a lot of the excess marginal supply of palladium into world markets. And on the demand side, especially with all the recent talk of pollution in China, where palladium is used in catalytic converters on petrol engines to reduce this, we see extreme demand for palladium. And palladium, slightly different to platinum in that they're both used for catalytic converters, but palladium is more focused on petrol engines. Petrol engines being the more common in China and the US, the two areas where we see car sales and the requirement growing.